Hello everyone, welcome back to my channel. So in this episode, I'm going to talk about Bollinger Bands, what they are and what they tell investors. Okay, so back on Investopedia here, we're just going to read this quite quickly here. A Bollinger Band is a technical analyst tool defined by a set of trend lines. They are plotted as two standard deviations, both positively and negatively, away from the simple moving average SMA of a security's price and can be adjusted to user preferences. Bollinger Bands was developed by technical trader John Bollinger and designed to give investors a high probability of identifying when an asset is oversold or overbought. So the key takeaways here: Bollinger Bands is a technical analysis tool to generate oversold or overbought signals and was developed by John Bollinger. Three lines compose Bollinger Bands: a simple moving average or the middle band, and an upper and lower band. The upper and lower bands are typically two standard deviations plus or minus from a 20-day simple moving average and can be modified. When the price continually touches the upper Bollinger Band, it can indicate an overbought signal. If price continually touches the lower band, it can indicate an overbought signal. Okay, so moving over to TradingView here, and we will set up the Bollinger Bands. The Bollinger Bands indicator, it actually just tracks the price. So as I stated before, it's basically the middle line, which would be the red line here. That is the 20-day simple moving average. And then the upper and lower band is just two standards of deviation plus or minus. Okay, so just going to zoom in here a little bit. So as you can see, the price action here, once it goes below the lower band, that's just indicating that the price is oversold, and chances are that eventually it will move back towards the middle of the Bollinger Bands. So it'll just trend back to the mean. And again, once it's at the top Bollinger Band, that's just saying that the price is overbought, and eventually it will revert to the mean and it will sell off again. So as a trader, you want to be careful because the Bollinger Bands can give a lot of false signals. Like, just because it's at the lower band, it doesn't mean that, oh yeah, you're going to jump in, put in a trade. If you do that, you'll end up just losing lots of money. So as a trader, a really good strategy is to incorporate it with another indicator, which I'm going to show you in a sec. But another thing to acknowledge about the Bollinger Bands is you can see here that the price is just getting compressed, and the bands are just getting so tight together. Like, look how tight it gets. And now, eventually, when the bands get really tight, that is always followed by an explosive move in the market. Now, it's not going to tell you which direction the price is going to move, but if you see the Bollinger Band squeezing really, really tight, then you know that volatility will come back in the market. And the tighter and the longer they squeeze for, then that normally corresponds to a bigger move is going to happen. I'll just zoom in here a little bit. So as you can see, like, the band just got so tight, and then boom, and the price moved upwards. So that is something that you have to keep an eye on. Like, is if when the Bollinger Bands just get really, really tight, you should expect a big move to follow. So we're going to add another indicator here. So this is a strategy some traders like to use with the Bollinger Bands, and I'm just going to go over it with you briefly here. So we're going to use the relative strength index. So we're going to click on this one here. And as you can see, then it's at the bottom of my screen here. Like I said in the start of the video, that when price action goes to the top of the Bollinger Band, or when it reaches the lower band, then it can give a lot of false signals. So as you know, the RSI indicator is basically it tracks the relative strength of the market. So basically, I went over this in a previous video, so you can actually go back and check it out if you want. But basically, when the price action is trending upwards, then you can see on the RSI indicator that it actually breaks the dotted line there. And once it breaks the dotted line, which is over 70, you know then that the price is overbought, right? So what I like to do is I make sure that the RSI, once it goes past 70, but I would like to, I always like to wait until it's like past 75. So then I know that this strategy will work, and it actually has a high success rate. So basically, price action shot up here, but it didn't break out through the top of the band, right? So, but it was overbought. But because it didn't break out past the top Bollinger band, then I knew it wasn't right to take a trade there. So as you can see here, price action broke out through the top Bollinger band, and you can see here it was overbought. So it did break out through the RSI. I'm just going to draw a line, but down here on the indicator, it made a lower high. Now I went over this again in the previous video. That this is what you call bearish divergence. So if you see buyer bearish divergence, you see that the price action is gone past the upper Bollinger band, and it was indicating on the RSI that the price was overbought. Then that's giving you lots of evidence that the price is going to sell off, and that's exactly what happened here. So so you can see then that the price just completely sold off here. So that would have been a good trade. So the best strategy when you're using the Bollinger Bands is to incorporate the RSI indicator as well, and only make a trade when it's past 75 on the RSI, or if it's past, let's say, 30 on the lower side of the RSI. So here's another good example where the price action broke out through the lower Bollinger Band. And then with my RSI, I can see that it made a low of like 15. And that's indicating that the price is oversold. So once you see this happening on both indicators, then you know that's indicating that there's a high probability of the price to move upwards. So that's just a little quick strategy of how to use the Bollinger Bands. And again, I like to go over when the Bollinger Bands compress really, really tight, then that's indicating that eventually volatility will come back in the market, and it'll either be price to the upwards or to the downside. Another thing I'd like to add is the Bollinger Bands only really work in a trending market like most indicators. So if the price is just chopping sideways like it's currently doing at the moment, they don't really work, and they'll throw off and they'll give you loads of false signals. So only use the Bollinger Band strategy with the RSI, and only make a trade when it's very much oversold or very much overbought. So that's your video on Bollinger Bands. If you're getting value out of this trading series, I really would like if you went down, hit the like button, hit the subscribe, and I'll see you in the next video.